Well, hello again from Sprott Money News at sprottmoney.com. We are ready to wrap up the month of February. My goodness gracious, 1/6 of the way through the year already. Oh, where does the time go? I'm not sure, but it's the end of February, and it's time for your monthly wrap-up. I'm your host, Craig Hemke. Joining us today is a new guest, Anil Virach. He is an executive vice president and a director at a company called Step Gold. And we're going to talk a little bit about that today after we wrap up the month. But Anil, thank you so much for joining me.
Thanks for having me, Craig. Great to be here.
It's great to have you, and I'm excited to learn more about your company. Again, before we get going, though, I want to inform everybody about the company that's a sponsor of all this content. All month long, we've had the monthly projections, chart projections from Christopher Mullen. We've had content. David Brady and I write articles. We've had the Ask the Expert. If you missed that, that was very interesting stuff with Michael Leibowitz. I would encourage you to seek that out if you missed it a couple of weeks ago. And now we got the monthly wrap up, all of it from Sprott Money, posted for free. So there's a couple of things you can do. You can thank them by subscribing or liking the Sprott Money channel so that you never miss any content. But of course, I mean, why wouldn't you be adding physical metal here? And they should always be a dealer of choice, whether you're in the US or Canada. Go to sprottmoney.com, check out all their deals, their storage deals. And of course, you can always call them at 888-861-0775. So, Anil, hey, talk about stacking metal. There is so much going on in the world. You know, we began this year, which, like I said, is only 2 months ago, but already seems like forever ago. Everybody and their brother thought there were going to be like 7 or 8 rate cuts, and that the Fed was going to be on this path and, you know, easy money and all this stuff. Well, that we've got like done a full 180, and now people are talking about 2 or 3 rate cuts, but yet gold's only down 1 or 2%. What do you make of that price action in gold? What do you attribute it to as the year's begun?
I think, listen, I think gold has been resilient in this market. It's been, it shows you that actually it has been performing, maybe not up to the standards we were all expecting at $3,000 or $5,000 at this point. It'll get there at some point, but, you know, USD strength, interest rates going up, as quickly as they did over that 12-month period. And you have gold actually holding up above $2,000. You would never know if you look at the gold equities, including the majors like the Newmonts and Agnicos and juniors like themselves who are producers. But certainly gold has served its purpose as the storage of value against the inflation and the divergence with interest rate cuts. And I think part of that is you're seeing it. Record central bank buying. The East continues to buy. You know, I'm Indian, heritage, and in Asia, it's in our culture for thousands of years, and that's not going anywhere. And it's always been that storage of value. It's a currency that still exists, and the central banks and the BRICS countries, I think, are continuing to accumulate at record levels, and that's helped prop up the price significantly, or keep it at this base that we're seeing. Not moving it up significantly, and that has to do probably with some liquidity also from other countries, whether it's the conflicts going on in the world today. Obviously, Russia being the main, I would say, seller probably to fund the conflicts. So you had that offset of liquidity and general liquidity. You know, nothing has changed. So people are expecting the rates to go down that's quickly in March and all this stuff going into the end of last year, but nothing has changed. Inflation still exists. The conflicts still exist. Record debt levels, at least on this side of the world, continue and continue to grow. You're seeing refinancing at the retail level, so individuals like myself, in Canada, I think we're probably 40 to 50% haven't even renewed their mortgages as yet. And those who are obviously having liquidity issues, and that's impacting the equity markets, or they're having to sell assets like gold. So all of that's, I guess, is maybe keeping it down from maybe where it should be, I would say higher today. But that's a good thing, because then we have a good base to work off when things do change. I would say second half of the year is when I think we'll see some light at the end of this tunnel. Maybe a first rate cut or two gets people confident, and of course that'll be good for gold, and I think finally gold equities.
Yeah, the last rally started from a base of just north of $1,800 and was $300 in 2 or 3 months. So you wonder, the longer we can hold in above 2,000, it's just a higher base for the next launch. And I think you're right about that global demand. I saw something a week or two ago about Swiss exports being at one of the highest levels in 6 or 7 years, something like 200 tons. And, for most people see, they recognize that's gold from the West. That's usually in like 400-ounce bars. It goes to Switzerland. It gets recast into the kind of the Asian standard 4.9 kilo bar, and then gets shipped out to the east, from Turkey to points east. I would suspect you probably see that in the part of the world where you trod most of the time. And do you expect that kind of thing to continue?
I do. I actually do. I think, even Mongolia, a small country that we are pre-COVID, they were looking to increase their gold reserves. And I was talking to
Yeah.
Eric about that, I remember years ago. Now, COVID obviously stopped a lot of exports and revenue and all that supply chain issues. Government had to convert some of that into to obviously funds and USD. And now as we're picking up again, I think you're going to see, our government in the region, we're hearing all that, like you said, that record exports from Switzerland. China is buying up at probably higher levels than they're always saying, and it's trading at a premium there. Still, that market is still at a premium. I would say a decent premium to what we're seeing here, and you're seeing a lot more continued interest from that side of the world. And I don't think it's, again, culturally not going anywhere. And with whatever orders coming next in the world order, those who have more reserves of these hard commodities that have real value to back up the currencies or whatever currency that's going to be, I think that's not stopping. Certainly. And you're seeing them buy the assets up as well, right? So a lot of these bids, recently been up by the Chinese coming in for all cash. They're buying, all the assets around the world as well for assets in the ground, not just the physical that's already above ground.
You've been in this industry for quite a while. I would ask you kind of a 30,000-foot question, because we're all pulling our hair out watching the producers just plunge so far this year. Some of them are just awful. And they're dragging down the index. You think, well, gosh, like if a company like Newmont wasn't in the GDX, maybe it wouldn't be down as bad as it is. But anyway, in general, what does $2,000 gold mean for the exploration industry? Because it seems to me like there's just a lack of interest, a lack of buyers. You can have these great resources and you can measure and indicate all this gold in the ground. It's like, is $2,000 and holding above there an important psychological level? Do we need to break out to get, cash to start flowing into the sector again? What do you think?
Yeah, I think listen, I think companies who have ounces in the ground, they're not going to get value for expanding that today. It's not the best use of cash.
Yeah.
Better to survive to get to the market where they will value those intercepts or the ounces in the ground or both, right? Right now, it's a waste of funds. If you have 2 million ounces, 3 million ounces in the ground, that's still sizable to get value when people care. Growing that to 4 or 5, I think, is not the most prudent use of cash. It's probably not good away. It's better to survive. So if I was an exploration company, the best thing to do is try to survive, wait for the market to tick up. And then people will pay for exploration plays because they know the big boys are spinning off even more cash. So going back to the Newmonts of the world, they're still spinning off cash. They still have good margin. They're investing assets, non-core assets, and there's all that jazz. But last time gold was holding above $2,000 in 2020. I think Nico and Newmont were double or triple what they currently are today. Yeah, right. And they are spinning off cash. And so I think with a uptick in the gold price, you're going to see more cash flow from these larger entities, and people will expect more M&A to happen at the lower levels. So you're going to see more consolidation and exploration. More companies need to be consolidated anyways. I think there's still too many junior companies, so it's hard to get relevance in the market. So you need scale and diversification is what we find is what investors drawn to. From a production point of view, investors now want to see a path to 300,000 ounces or over. Something that can come online. You don't like for us, we're going to get there in a few years, sure, but they see a path to that and have multiple assets to offset the risk that exists in this world, whether it's wars, pandemics, supply chain, you name it. On the exploration side, there haven't been too many new discoveries because we've had underfunded juniors for years now, not just, as we were talking about earlier, not 6 to 9 months of, a downturn and no funding. This is years of no funding. So in order to get the lift there, I think there needs to be some consolidation. So there's more prudent use of cash going forward from these exploration companies, because again, no value for putting holes in the ground today, from what we see. But they'll value producers, and then people expect as the cash flow increases from the largers and the mid tiers, coming down to even juniors, there's excess cash in the system to go advance these exploration companies, invest in them or acquire them. So I think there will be that rally, certainly, but there's still the problem is there's underfunded. These are underfunded companies. There's a severe lack of capital for explorers today, and so it will take some time, but they'll come back. They always do, right?
Yeah. Anyway, let's talk a little bit about your company, Step Gold. I know, people obviously listening to us are familiar with Eric Sprott and all he's done over the decades. He's always looking for new areas that are underdeveloped and have great promise. And I think a lot of people are familiar with his enthusiasm for Newfoundland and all that's going on there. But what they may not know is his enthusiasm for Mongolia. He's been kicking the tires and looking at the prospects there, which you think, wow, that's the other side of the world. And it literally is the other side of the world. And that's where Step Gold operates. If you don't know Step Gold, please check it out, stepgold.com. And you will see that they are actually the largest gold producer in Mongolia. Now you might think, okay, that's like how do you compare that? That's like the top baseball player in North Dakota, right? Or something like that. I don't know. You might, again, I mean, it's not to diminish what you guys are doing, but it kind of shows how the world is just beginning to recognize the vast potential of this area as a resource play. So let's start by, please tell everybody a little bit about Step Gold, the recent acquisition you made that has made you the largest producer, and some of your business plans going forward.
Absolutely. So going back to Mongolia, it's a resource-rich country, one of the richest, I would say, still undiscovered, home to world-class assets and discoveries, like the biggest copper mine, one of the biggest copper mines in the world, like Oyu Tolgoi, that Rio Tinto operates. It's underexplored, only 1% explored. So strategically located between superpowers of Russia and China, and you have a stable government, and you can do things with the government very supportive, as we've shown and demonstrated with Step Gold. So we're a gold and silver producer today, mainly gold from our oxide mine that we brought online in April 2020. So we've been in production for a few years now expanding into our sulfides, which will come online in 2026. So taking our production to over 100,000 ounces per annum for an initial 12-year mine life at about $950 all in cost, and still growing, because we've only drilled down to about 350, 400 meters, depending on the deposit. So, and we're seeing mineralization and new discoveries. So that our project is a phased approach. Phase one, oxide mine, we built, developed, use that cash flow to explore and grow the much larger asset base underneath. And yet we still have 90% of our property, our mining license, that's not explored. So there's a lot of opportunity for satellite deposits for oxides and sulfides. So what we did is take a non-core asset from Centerra Gold in 2017 as a private company. It was 1.2 million ounces at that time, inclusive of 210,000 ounces reserves. Today, with just a little bit of drilling, it's over just under 2.5 million ounces of resources and 1.7 million ounces of gold equivalent reserves. So that's a big uptick with not a lot of investment, to be honest. It's just more of a geological reinterpretation of the work done with our team, saying, hey, we know this is going to grow, and we've proven that out. We didn't have a lot of money to keep growing it to 5 million ounces. We do think it's going to be a 3 to 5 million ounce deposit, but the cash flow from our phase 2 expansion will self-fund the exploration. This could be a 3 to 5 million ounce deposit on just this deposit. We have a second property that's adjoining Erdene Resources, who've had a lot of success in country over the last few years with discoveries. And then we're now acquiring this new Buru operation, which takes our production immediately from 30,000 ounces to about 90,000 ounces starting Q3 this year. And we'll be producing at a run rate for the next 2 years at about 90,000 ounces per annum at about $1,000 all in cost. So that makes us the largest producer in country from primary sources. And then in 2026, with our fully funded debt package for our phase 2 expansion, we jump up to 160,000 ounces of production at about $1,000 all in. So scale today, by Q3 of this year, we're a 90,000 ounce producer, $1,000 all in. So rough numbers, that's equivalent to a 150,000 ounce producer at about $1,400, $1,500 all in. So we're going to start showing up on these screens, when
Yep.
investors look at Bloomberg and whatnot from a profitability, our EBITDA, our free cash flow, all that. So that's huge, right? So we have
Mhm.
at scale today, and we have this fully funded expansion coming online. And then we still have all the exploration upside and sizzle that Eric and all these other investors like on both of our properties in country. So you have a 14,400 hectare exploration license that we haven't had the time or money to focus on. But like I said, Erdene has already, shown over 1 million ounces adjoining our license and growing to 2 and building a mine over the next year or so. So we're in the right area there. And then our current license, 90% of it we haven't actually explored. So only the deposits sit on about 10% of the mining license, and only still drilling at 350, 400 meters and growing. So that's going to grow significantly, I would say, just from a depth. And then we have opportunities for more satellite deposits on that. So the key part is self-funded exploration. So
Yeah.
we're going to fund without having to go to the market on new discoveries to keep growing this asset base. And the goal is to have 3 or 4 operating mines in Mongolia, where our focus is. We are a Mongolian company. We're well received there. We started, a greenfield project we bought from Centerra with 3 guys and no money to now 350 local employees. And doubling that in the next 2 years with just our current project, and also acquiring 500 new employees with our integration of the Brew complex shortly. So a lot going on, and we've accomplished quite a lot in short order. And our goal is to become a 300,000+ ounce producer focused solely on Mongolia, where we have an edge, where we have first mover advantage, we have the infrastructure, a cash flow and production growth.
Well, and it's a fascinating story. Again, we're all familiar with the companies that are constantly diluting themselves. They're out staking and drilling, and then they need more cash, and then all of a sudden, they got to come back. Not that that isn't something you might want to do someday, but the fact that you're able to cash flow your future exploration off of your current production in an area where who knows what you might find up there. It totally unexplored, virgin territory to a large extent. I find that fascinating. And you think about where you are, talk just a little bit more about your position and the jurisdiction of Mongolia and what the rule of law is like and what the infrastructure is like. I think most people are familiar geographically, the idea that you're kind of right between China and Russia, which are pretty big gold accumulators, that might look at a Mongolian company and go, huh. But outside of that, just the jurisdiction in general, so people can feel comfortable if they decide they want to invest in a company like Steppe Gold.
Yeah, absolutely. So, Mongolia itself became independent. When the Soviet broke up, it was one of the Soviet satellite countries. So in the early 90s, gained independence. Arguably, and CNN was in country in the summer, and they did 3 days, shooting out of Mongolia for Quest Means Business. They even said it themselves is probably the best functional democracy out of those former Soviet countries in region. So that's a huge thing. Parliamentary elections every 4 years, with a 1-year offset for the president. But the prime minister, really, just like in Canada here, you have members of parliament, prime minister runs the country. I would say the president's more like a governor general role, if you want to put it that way, for comparison. So stable government, major majority for the last 2 terms since we started Steppe Gold in 2016. Pro mining, pro foreign investment. Mongolia is a mining jurisdiction. That's the biggest driver of the economy, biggest employer, most taxes. So very important to the country and the government. They haven't changed any taxes or royalty regime, since we started our company. In fact, they actually gave us capital when we announced our feasibility study for our expansion in 2021. And we've since paid back, but it helped us grow when the markets were soft and we still had to raise our project financing. So supportive government, we own 100% of our asset. And there's already a world-class, elephant, size asset discovered by, Robert Friedland. Rio Tinto now operates, called Oyu Tolgoi. So you can build a world-class mine. You can discover a world-class mine and build it and operate it in country. And that employs about 16,000 people today, and that's growing and expanding. So Rio Tinto showed their confidence in the country by consolidating about a couple of years ago and buying Turquoise, because they're consolidating the ownership and taking on the associated capex. That's a big endorsement. And they've publicly said themselves in the last 6 months many times how strategic Mongolia is, how excited they are, and obviously they're there. Since then, you've had the Chinese major Zijin Mining make an investment in a copper gold company called Xanadu. The French government just last year, Macron was there, and they signed a $2 billion uranium agreement. The Japanese, the Koreans, the Germans, the Indians, Canadians, the US are all there. So part of, go back to, we're strategically located between Russia and China, but we're favorably located there so that we're more strategic to all these other countries that I just mentioned.
Yeah.
So opportunity, and in a way, a level of protection. So no one's going to take us over. They tried, right?
For millennia.
Yeah, exactly. So it's a country that's, I would say, one of the last frontiers. It's like going to a continent like Africa, where was resource 30 years ago, and you have all that opportunity, and you have all these right partners here coming in. So very exciting time to be involved in the country. I was safe. So the rule of law, like we mentioned. In fact, we've had the government come to PDAC here in Toronto, led to come this weekend since 2016, since we even started coming on the stage, talking about how supportive they are. They don't want to own the assets. They want to be a passive royalty partner, collect the taxes, and help support partners like us grow their economy and educate and skill and employ the local workforce. So,
it's fascinating. It really is. I mean, it's something I'm sure most people watching us have never really even considered. And you can certainly see why Eric and his team are getting involved there. It's a fascinating opportunity. If people want to learn more, what are your ticker symbols in the US and in Canada?
Yeah, so on the main board of the Toronto Stock Exchange, our ticker is STGO, Sierra Tango Golf Oscar, and on the US OTCQX, STPGF.
Got it.
And of course, we're always available to talk to any investor of any size. I speak to the smallest to the biggest, like Eric, and everyone in between. Very accessible. Our website has lots of good videos of our site.
Yep.
You can see our operating mind, the people, and we're always accessible. So it's never a better time to get in a producer that's expanding and exploring. We have a nice little mix here and a lot of upside, obviously, given where the market is today.
And just make sure I didn't butcher the website address earlier, did I? Just stepgold.com?
It's stepgold.com, STEPPE gold.com.
Right. For those of you that failed geography class, step, right? That's a land region as you move north. Okay. So it's not STEP like what you take to come up from your basement, right? STEPPE gold.com. And Neil, it's been fascinating to visit with you, and I hope we can do this again soon. As we wrap up February and wrap up the month, I want to remind everybody a new month is beginning. We got an extra day in February that we got to deal with, but it'll be March soon enough, and there will be a whole bunch more content coming from Sprott Money. So if anything, click the like or subscribe button on whichever channel you've been listening to this or watching this, so that you're reminded every time Sprott Money puts something out. And then, of course, stop by Sprott Money anytime you're in the market for physical gold and silver, or a place to store it. 888-861-0775 is the number. You can call them. It won't cost you anything to do that either. Anil, it's been great visiting with you. Again, this has been Anil Virach. He is an executive vice president and a director at Step Gold. Pretty good size holding of Eric Sprott and his team. I guess you might as well check it out. Anil, thank you so much for your time. It's been fascinating.
Thanks for having me.
From all of us at Sprott Money News and SprottMoney.com, thank you for watching. Hey, we'll talk to you again with all kinds of content coming at you in March.